Mathews, Head of Investment Research at Julius Baer, is with us. Mark, thanks for taking out time for us. What do you think is happening in the global world of, global world of investments? We are seeing all different, sort of asset class react very, very significantly and in a sharp manner. What do you make of it?
Well, it's an old-fashioned bank panic, and in this day and age, it's not something that a lot of people would have expected. Ironically, technology has been the catalyst for it, because with the social media and the various messenger platforms, news spreads at lightning speed, and people can withdraw their money at lightning speed. I would say the mood obviously is still very fragile, and I think a lot of people were surprised that after the FDIC came in and committed to guaranteeing the deposits of this relatively small and unheard of bank, which by implication means that the entire system is guaranteed. There wasn't a strong bounce on Monday. In fact, it was the exact opposite. And so the market is still very fragile, but I do think that point I just made is extremely important in the longer term, that this is basically a big deal, and they are guaranteeing the entire financial system indirectly. Now, longer term, what that means is that banks should be more valuable, not less valuable, because the risk of deposits, because the taxpayer will now be guaranteeing these deposits, so bank shareholders would benefit. So short-term panic, long-term, I suspect this is actually going to prove to be a good thing for bank shares.
Interesting. And, when it comes to, global equities at large, Mark, do you think that this panic should be bought right away? Because while, markets may be playing, or rather, this panic may be playing as per the book, what's different is this time is that there is a growth slowdown concern. Inflation as well as interest rate trajectory is climbing upwards as well. Do you think right now is the time to buy equities from a longer term perspective?
I think it is, yes. I think if you were to turn off your computer and come back in 6 months, markets would be quite a lot higher. But the thing is, we do have this February CPI coming out tonight, and if that's a high number, then I think the market will go down a lot more, because the feeling will be that the Fed's stuck between a rock and a hard place. If they back off now on crushing inflation, if it's still a high number, then we still have inflation that's getting out of control, and so that'll be critical. But I suspect that we'll look back on this 6 months from now, perhaps a little bit like we looked back on FTX today. FTX, as you might recall, caused a lot of consternation at the time, but not a lot of people are talking about it today.
But, as you said that, markets have started reacting a lot to these high frequency data also in a much sharper manner. But with what's happening globally, you think today's number also becomes a non-event, because the focus is now what do they say about the bank that is failing in, or what are the measures that the Fed will take to ensure that such things don't happen again?
No, I think tonight's number is extremely important, as I said, and the consensus is for 6% year on year for the CPI. I'm afraid that it might be disappointed, because the Cleveland Fed runs a inflation nowcast, which is suggesting 6.2. And of course, the difference between those two numbers is very small. But when everything's hinging on this particular number, then actually it becomes a big difference between 6.2 and 6. I don't know. I mean, I think, as I said, I feel that from a market point of view, the backstopping of the Silicon Valley Bank deposits and Security Bank deposits is an extremely important piece of news that has bullish ramifications long term. Unfortunately, it's not good for the taxpayer, because, as I said, it's essentially transferring risk to the government. Yeah, I better not ramble.
No, not at all. You're making sense throughout it all. But Mark, what do you think is the big concern for Indian IT? Because, many believe, considering many of them do handle international clients, and a large part of them is the US banks as well, you are seeing the IT index getting clobbered right now. You think the concern is valid?
Well, for the technology sector, I think there's an irony here, which is that the ultra low interest rates and quantitative easing of the past decade, we can see where the money went because Silicon Valley Bank's deposit base trebled within the last couple of years. And so that clearly speaks to the what should I say, the fact that there was a lot of misinvestment in venture capital. And of course, the majority of venture capital is technology. But how that feeds through into India, my sense is that it won't be too impacted because I just feel that the Indian IT ecosystem is extremely vibrant and for real, and good things are happening there. And the cost of capital was not so ridiculously low to create the same gross inefficiencies as was the case in Silicon Valley itself.
Right. Thanks, man. Thanks, Mark, so much for taking our time for us. Let's welcome in